Hamilton Lane is looking at the retail business. The firm, known for its private market investments, is looking to bring investments to retail investors in a bigger way. In a relationship with Republic, together they will also be launching a digital blockchain-based solution for individuals. Here to explain the vision, Erik Hirsch, Hamilton Lane co-CEO. Erik, you know, this retailization of the private asset industry is perhaps the biggest trend going on. You see it from BlackRock to Apollo and yourselves. How do you think that this will evolve this year? What's the biggest move being made?
I think this is a beginning of what's going to be a long journey. And the individual investor has been essentially kept out of an asset class that the institutional investor has had the advantage of for the last 40, 50 years. And it's been a huge advantage. If you take a look at any pension fund that's sort of done reasonably well, private markets have been a huge driver and contributor of return and performance for them. And so I think the individual investor has seen that. They've gotten much more educated on it, and they simply want what the others have had, frankly, for a while.
You know, another interesting aspect of this, too, is tokenization. I'm wondering how much that will really help bring more retail access to these private funds. I've heard over and over that bringing private funds into tokenized form to investors could help really reduce a lot of costs when it comes to paperwork and middlemen and otherwise.
I absolutely believe that to be the case. Again, our asset class was completely designed for a large, hugely sophisticated institutional investor that frankly liked a lot of that bureaucracy because it was sort of a check and balance system. So tons of paperwork, very laborious, very manual, lots and lots of lawyers involved. And I think what you're sort of seeing is that there really doesn't need to have that exist anymore. Technology has advanced to a point where we can do these things successfully, safely, securely on blockchain. And so I think this is no different than what we have seen the trend for all of us individually of we want things sort of better, faster, and cheaper, whether that's ordering dinner or whether that's getting a refill on grocery items. This is really going to be the same. So I think the token part of it is simply allowing access to be there. And you're right, Sonali, significant reduction in both the friction cost and the actual cost. And this is simply a move closer to being able to do all things that we do now on our smart device.
Yeah. I'm a convert as well, but it's really just about back office, not much else, except for it does bring costs down, right? It makes things faster, gets us closer to T-0. Erik, I wonder more about the private market side of this. Do private markets offer investors a benefit beyond, or the companies a benefit beyond kind of regulation light? Is that the main point?
I don't think this should be regulation light, frankly. And I think as we make this move more into that retail investor, this is going to go from today, regulation, I would say, sort of moderate to, frankly, a little bit heavier on the regulation side. And I think that's just fine. I think if we're going to sort of be a big person asset class, then we're going to have to hold ourselves to big person standards. And I think that there's nothing wrong with that. And if people are talking about kind of the ultimate dream of inclusion in things like 401ks, then we should just all go into that eyes wide open and expect and understand that the regulatory piece of this is going to rise and not fall. So that said, I think there are a couple of huge advantages. One of it is simply a diversification issue. You all have talked about it. We've all talked about it. The public markets have a concentration problem, and I don't see that problem going away. Companies don't want to be public. We're not seeing kind of a huge growth in the actual number of publicly traded businesses in the United States or elsewhere. And beyond that, again, we've never seen concentration at a market cap level among such a small number of companies as we're seeing today. That is a problem if we're saying to individual investors, hey, do the right thing, save for retirement, diversify, make sure that you've got your exposures correct. We're basically funneling them today into a system that is the opposite of that. Yes, the public markets can be accessed easily and cheaply, but they are hugely concentrated, and that is not great for our savers.
It's interesting because we are obviously days away from inauguration, and you and I have talked about this before, Matt, this idea of a new Department of Labor, meaning, okay, a look at what it would mean for 401ks and other assets to be making it easy for people to access private assets. Erik, 401ks, you brought it up again. I know the last time we talked about how this was a long road. But then you think about some of the existing players, it's hard to imagine a world where even BlackRock's not going to be fighting for that to happen now that they have more access to private assets. Do you think that this happens faster?
I think it's a question of what it is. I think if we're talking about taking traditional private market funds as they're constructed today and dumping them into 401ks, I don't see that. I think the whole tradability of 401ks and the ability for people to kind of rebalance real time means that you're going to have some real changes around how we value assets and the frequency that we do that. Sonali, as you well know, this asset class has existed for decades on a quarter marked with a lag. None of that's going to work in a 401k environment. So are there solutions to it? There are. Are some of them going to need to involve some regulation and rule changes? I think they will. And so I don't know that I see this as a tomorrow issue. I think there are steps that you can make that are going to be interim. So, for example, having a portion of target date funds have an exclusion around sort of real-time valuation, that would be a step forward, and that would sort of be starting a chance for you to kind of bridge your way into that 401k market.
I want to do, let you do a little marketing and also learn a little bit about your business. Erik, why did you choose Republic as a partner on this? What do they do to make, your product better?
I think this is really just about ease of access. I think for us, we see a number of players, Republic being a great example of that is building technology in a platform that's allowing individual investors to simply access the private markets through their system. And so for us, our big theme has been ease of access is absolutely critical. And secondary to that, making sure that those friction costs and actual costs are coming down. So we've partnered with Republic to do that. You've also seen us have other initiatives with firms like Securitize and others outside of the U.S., where we've been tokenizing a variety of our products and trying to put them in a multitude of platforms so that investors can find them. This is about kind of meeting the investor where they are. The individual investor, as we know from every other way that they transact, you need to meet them where they are. They're not going to kind of conform to what you want. Investors want it their way. So again, whether that's ordering food, dining, clothing, whatever, this is going to be absolutely no different than that. So I think it's going to be a question about access in a variety of platforms. Ease of use, ease of use, ease of use.
Erik, we thank you so much for your time today. That is Erik Hirsch of Hamilton Lane. Certainly technology and transaction costs, just like every industry, the asset management industry is certainly where people are keeping a close eye on all that.
Yeah, no, absolutely. Really important stuff for investors.